Hi, how are you, students? Today we are going to discuss the company's accounts, final accounts. That is, today in this session, profit and loss account. Right. Earlier, we used to prepare the profit and loss account in T format, right? T format we used to prepare. Here we are going to prepare on the vertical format, right? In vertical format, you say in a statement, this is the format according to the accounting standards. We used to prepare the final accounts according to the accounting standards, right? So accounting standards used to prescribe us to prepare the accounts like this, right? First, statement of profit and loss. Okay, that is the heading we used to give, statement of profit and loss account. First column is description, second is notes, right? Third is amount, and fourth is amount. Four columns. So here we used to prepare notes to the accounts. This is accounts. This is notes to the accounts. This is the notes to the accounts. We used to mention the note numbers here in the notes column. We used to mention the note number, right? So if you say revenue consists sales minus sales return, sales minus sales return. So that amount will be shown there. We don't show in the revenue column sales minus sales return and that and this, right? So it is the summarized form. This profit and loss account shows a summarized form, in a summarized form. If you want to see in detail as to what has happened and what is the reason for uh, decrease or increase, you can go and see in the notes to the account, we used to prepare. Just we are going to see the formats. Okay, format of the P&L. In the P&L, we used to prepare revenue account. In the revenue account, in revenue, we used to prepare the mention the note number 1. In revenue, you say this is note one number 1. Okay, this is the note number 1. Sale of goods minus sales return. That is the revenue, right? We have shown in the notes detail. Other income. What is the other income? Right? Other income. We go by the notes, right? Or we can go by the here in the item wise. Other income in the sense other income, right? Other income, interest received is the other income. Dividend received is an other income. Rent received is an other income. So we used to say these all consist other income, right? So we used to take this amount to here other income. Then note number 7. If you want to see what is the other incomes, you can see in the notes. Interest received, how much you have received. Dividend received, how much, right? Rent received, how much. All the things you have to go in and see. Okay. So that is the detail provider, right? Notes to the accounts. So we have seen notes to the account. Number 1 is over. Number 7 also over, right? So next is deduct expenses. After arriving at the income revenue, you will deduct the expenses, right? First expenses, changes in the inventories, right? Changes in the inventories, right? That inventories of goods and work in progress. What is the changes in the inventory, goods in work in progress and cost, work in progress and the finished goods, right? That is, we have not given here any inventory number, otherwise we can prepare the note also. Next one is raw materials consumed, raw materials and consumables used, raw materials and consumables used. For that we have a note, because cost of material consumed, stocks, opening stocks of raw materials, purchases of raw material, carriage inwards of raw material, minus closing stocks of raw material. Then you will arrive at the raw materials used. Okay. And employee benefit expenses, right? Employees, this is all depends, all consist of raw materials, right? If you are involved in the trading, this will consist of finished goods, right? Purchase of finished goods, purchase of stocks, opening stocks, finished goods, right? Like that. So the name of raw material name will get changed. Other than that, no difference here, right? You had to give employees, right? Number two, raw material consumed, right? This is number two, right? And employees benefits is number three. This is employees benefits. Employees benefits expenses includes salaries and wages, contribution for EPF, ETF and EPF and EPF, right? And PF, Provident Fund, right? That is, and staff welfare, any other expenses that are involved with the employees, right? If it is insurance involved in related to the employees, you have to add the insurance amount also, right? So in Sri Lanka, we don't provide, normally we don't provide insurance to the employees, but in the foreign countries they used to provide the insurance, right? So that these costs are called employees benefits expenses or employee cost, right? That has to be briefly we have mentioned here, employee benefits expenses, right? Next one is depreciation and amortization of expenses. Depreciation and amortization of expenses, right? Depreciation expenses, we can open a note here. Fourth, depreciation or amortization. Depreciation on fixed assets amount. You had calculate the depreciation individually here and put it there. Or normally depreciation, for the calculation of depreciation, it is the requirement of the standards that it has to be the company account. In the company accounts we had to provide the schedule like this in the notes to the accounts or anywhere else. So we either we can make this note number 4 or note number 4 here. In the note number 4 here, this can be used for the balance sheet also, not only for the profit and loss. You can take and use it for the balance sheet also. It will help for the both final accounts, because in note number 4 we used to prepare the first column depreciation, right? depreciation, that is a description in first column. Second, third, fourth, fifth items, what are the items are there, fixed assets items are there, and final column will be the total amount column, total column, right? Balance as at first, for an example, 1st January 2020, the balance will be here. And additions, whatever the additions you are making during the year, the additions you are mentioning here. If you say this is land, this is building, this is motor vehicle, this is office equipments and total. Here additions for the during the year, additions whatever you have purchased during the year. Maybe you would have purchased land or building or motor vehicle or office equipments, etc. So you have to add it here, and in that addition column you have to mention. If you have sold out any properties, you have to mention disposal minus, you have to deduct this one, right? This is disposal minus, right? Minus, you have to deduct this one, right? Then you will arrive at the balance as at 31st December 2020 or some whatever it is, right? End of the year, what is the balance you have? That the in this what you call um, diagram, you can find out. In this schedule you can find out, right? Next one is accumulated depreciation, right? Accumulated depreciation. Here you will provide the detail of accumulated depreciation. Balance balance as at 1st January 2020 or something. You will put the balance brought forward, right? Then second is addition. You have to add addition, whatever the depreciation you have made during the year. The depreciation made during the year you have to mention in the addition column, right? Addition column. Disposals, whatever the fixed assets disposed, the accumulated depreciation relevant to the fixed assets has to be removed. That has to be removed through the disposal column. You have to deduct that amount from disposal column. So if you add it, if you bring the balance, that will be the accumulated balance, accumulated depreciations balance as at end of the year, right? This is the schedule you will provide. Okay, so here if you say depreciation total, right? Addition column, you will get the depreciation column, addition minus disposal, then you will get the depreciation column, right? Opening balance plus additions minus depreciation, you will get the depreciation, total depreciation for the year. Okay, so we have seen that also. So this is okay, this is okay, this is okay, and this is also okay, this is also okay. Depreciation also okay. Next one, expenses, right? Other expenses, right? Sorry, not other expenses, finance cost, employee benefits before that, and finance cost. Here you have to say finance cost, right? Cost, right? This is finance cost. Finance cost, fourth one is depreciation, right? Fifth one is finance cost. Finance cost, what whatever interest we have paid on loan, debentures, and maybe loan may be the long term loan or the short term loan, that is immaterial, but the interest paid on loans and debentures we have to mention here in the note, and that amount has to be taken here, right here. That also okay, we have prepared. Okay, and other expenses, in the other expenses, this is the other expenses. In the other expenses, all the expenses that have not been mentioned in these notes has to be recorded in the other expenses. That means rent, insurance, repairs, electricity bills and fuel, water bill, stationery, audit fees, and severages, or all the expenses has to be mentioned in the other expenses. For other expenses, we have to mention number 6. Number 6. Note number 6. So other expenses also we have completed, right? So here, up to here, we have made, or we have given all the notes to the account. So you will get these all total expenses. These all the expenses, total it down, bring it down and mention as a total expenses. So if we deduct these total expenses from the revenue, we will get the profit before income from extraordinary, before profit before um, before tax, right? Profit before tax, tax from extraordinary items, from profit before tax, and you say before extraordinary, income from extraordinary, profit before income, income from income from extraordinary items, profit before income from extraordinary items. This is the income we have derived, and thereafter we have to deduct, add profits from extraordinary item. Have you Did you understand what is the extraordinary item? Extraordinary items or extraordinary activity, right? That is like that we can mention. That is extraordinary activities in the sense, if you are getting an income through disposal of fixed assets, right? Through disposal of fixed assets, that from the disposal whatever you get will be shown here, profit or loss from extraordinary activities, income from extraordinary activities, right? Here income or loss, income or loss from extraordinary activities, right? Then profits from extraordinary activities, extraordinary items, and thereafter profit before tax. This is profit before tax. Okay, this is profit before tax. Okay, this is profit before tax. Then you will insert the taxation for the year, taxation for the year. Then you will get profit after tax, or operating profit after tax. You will mention like that, operating profit after tax. This is how you have to work it out, the profit, the statement of profit and loss, right? So hereafter, maybe I will provide the statement of financial position, then thereafter the format of statement of financial position, thereafter we can do the sums. Okay, thank you.